Now let's talk about this delayed charge option here. What is this? First, let me explain you the scenario. Let us say we want several milestones to complete before we can send the invoice to the customer. We have to record those milestones somewhere. You can create a draft invoice, keep updating it line by line and saving it, and send it when it is complete. Or there is another option, that is, for each milestone you can use the delayed charge. Let me give you another example. Let us say that we have, as a dental clinic, we have a contract with a company. Their employees visit us for consultation and for treatment. We keep noting it down, but we send them one invoice at the end of the month. How would we record each individual visit by the employee and the services provided to them before we send the invoice to the customer? In this scenario, the delayed charge come in. Let us record the delayed charge here for a customer. Let's enter the customer name, which is EasyWays. This is a company with which we have made this agreement that we will be providing consultation and services to their employees, and we will be sending them one invoice at the end of the month. So customer name EasyWays, you can enter something like a dummy email for now and then save this. And now here, first of all, select the charge date. For me, this is going to be 1st of April because I'm assuming that this employee visited us on this particular date. You will of course choose the correct date, whatever that is. And then here in the product or service, let us choose a product. In the description, I am entering the employee name so that I can remember that. So I'm saying employee number instead, that is 107, and the quantity is 1 and the rate is, let us say, 150 pounds. So let's click on save. You can of course add some memo or attachments, but I will just save and close here. Now you can see that the delayed charge has been recorded. But before I move to the other delayed charge, let me show you something. Let me find this delayed charge here and let me show you. There is no journal entry again, which means that this is also a non-accounting transaction. So I repeat, delayed charge is for our own memorandum and assistance. This is not an accounting transaction. The accounting will happen later on when we actually raise the invoice against this delayed charge. Now here, let us click on save and new, and let us quickly record a new delayed charge as well. So again, the customer name is EasyWays, and this time the charge is going to be again for consultation, but the employee number is going to be 205. The rate for that is going to be 70, so total amount is going to be 70 pounds. And with this, let us click on save and close. So we have recorded two delayed charge against our customer EasyWays, and now at the end of the month, let us record our invoice here. And you will notice that as soon as you press the EasyWays here and press the tab key, system will give you all the charges that were recorded against that customer. And please take a look how easy it is to apply the charge to that invoice. Click on add and click on add, and you can see that your invoice has been prepared. All you got to do is to make sure that you are choosing the right date and the due date, and that is it. And that is it. Now all you need to do is to save and close or save and send, and the invoice will be sent to the customer immediately. How that will look like, take a look here. The complete invoice with all of these details that were earlier recorded in the delayed charges. With this, we have now recorded our delayed charge as well. So we have recorded a lot of different transactions in this particular month of April. We have made sales, we have received payments, we have issued credit notes, and we have done a lot of different things here in our sales section. Now, a best practice in the sales is that at the end of each month, we send a statement to our customers. In that statement, we mention a summary of all the sales that we have made, the money that we have received, the credit notes that we have issued, and any other adjustment that we may have made. This is basically to reconcile our balances with the customer and to make sure that whatever we have recorded matches with the customer records and there is no mistake there. If there is any mistake, for example, we have recorded some invoice that is wrong, when the customer receives the statement, they will notice that this invoice is something wrong. They will mention you and you will be correcting that before it gets too old. But one small request. Before we send this statement summary to our customers, please make sure that your own records are complete. You have recorded all the transactions, and one way of ensuring that you have recorded all the transactions is to make sure that you have already reconciled your bank accounts and your petty cash. Now after this, let's now send the statement to our customers. How would we do that? We will simply click here on New and click on Statement. Here, first of all, system is asking you that on which date you want to prepare your statement, because system is not dependent on today's date. You can choose any date and system will automatically pick the data according to the selected date. So I would say I want to select the date of 30th of April, and then these two dates are important. This can be ending date is definitely today, this is coming from here, but then the start date. Do you want to send the monthly statement or you want to send the 3-month or maybe a full year statement? You can select the date from here, and this way you can make sure that you are choosing the right period. Here in the customer balance status, basically system is asking you that what type of customers do you want to send the statement to. In this case, we are saying that we are sending the statement to all the customers, but you may like that we don't want to send the statement to all the customers. We just want to send the statement to customers where there are overdue balances. You will click here and system will automatically bring in the customer where there is an overdue balance. That is your choice. If you like to work this way, it is completely fine. And if you say that I only want to send the statement to the customers where there is an open balance, that may not be overdue, but there is an open balance, there is a current business that is happening and open balance. So you will click here and system will only bring the customers where there is an open balance. But I would say that you should ideally be sending the statement to all the customers. Now let's talk about this thing here. Which type of a statement do you want to send? Okay, let me before here let me summarize. The statement date, the range of the dates between which these two dates all the transactions will be picked up, and then to whom send the statement. Now here we are talking about what should be presented on the statement. Should we present the brought forward balance as well, or should we ignore that and just move on? If you will select this one, the transaction statement, system will only show you the transactions of the month. It will ignore the opening balance. But if you select the balance forward, system will also pick up the opening balance, and then all the transactions will be taken here as well, and then system will show you the closing balance. So definitely this looks better. And then there is open item. If you look at this particular statement, in this case system will only show you that invoices that are still open. If the invoices have been raised but already been paid, system will be ignoring that. So of course in my case I prefer to use this balance forward statement, but let me quickly show that to you. Here we have balance forward. Let us print or preview, and you can see here we have balance forward at the end of last month, and then we have invoice, and then we have sale receipt, and if you scroll down it will be appearing one by one for all the customers. Don't worry, the relevant statement will be sent to the relevant customer. So for example, David Williams will only receive this page, and Easyways will only receive this page. This is given to you in such a file that if you like to print all of the statements and send manually, you should be able to just print here and system will give you all the statements all together. But if we send this using the email option of QuickBooks Online, only the related page will be sent to the particular customer. Now let's get back to the point that we were just talking about. That here we have balance forward and then all the invoices and receipts, balance forward and then all the invoices, balance forward and then all the invoices and receipts and refunds and credit notes. Everything has been mentioned here. Now let me close this and let me show you if I just talk about the transaction statement. In this case, print or preview, you will notice that there is no opening balance. System is only giving you the transactions in the month, total amount, total received, and scroll down here you can see the same, and here you can see the same. Now let's talk about the third option as well, that is open items only. Now let me show this to you, that if I print this and scroll down, you will see that here for John Hills, even though there are so many transactions, it is only showing you one particular invoice. It has ignored all the other activity of refunds and payments and credit notes. Why? Because you have asked the system to show you only the open items. So let's close it. And now I would personally say that this one works best. This is the standard statement format. So all you got to do is to click here and then make sure that you are selecting all the customers. Here you will have to enter an email, of course, and then you will click on save and send, and this will be sent to all the customers, and this will be definitely a very professional thing to do, that at the end of the day you send a summary to your customers and then you could reconcile all the balances. Now here I would like to mention one more point. The practice of sending a statement is done by the sellers. So if we are purchasing something, we are buyers, in that case we will not be sending the statement to our suppliers. They are rather supposed to send the statements to us. So who sends the statements? The seller sends the statement to the customer. Here for the reconciliation, we will send this to our customers and we will do the reconciliation with them. And in the other case, for our purchases, the sellers, where we are buyers, the selling companies will be sending the statement to us, and then we will be reconciling and making sure that all the balances are correct. So when we talk about the reconciliation in accounting, it is not just the bank reconciliation, it is also the supplier reconciliation and customer reconciliation. These three reconciliations combined together brings a lot of confidence in the books of accounting. There is a fourth type of reconciliation as well, that is control account reconciliation, but we will talk about that later on. That is not something relevant here. So I'm just making the point that in accounting there are four types of reconciliations, and all four combined together brings a lot of confidence in the books, and we are always confident that whatever is mentioned in our books of accounting is correct. So as I told you before, QuickBooks is not just an accounting software, it is a complete business management tool. So let us talk about another feature that is related to sales, and it is offered in QuickBooks Online. So usually when the sales cycle begins, it begins from the customer inquiry. And in response to the customer inquiry, we share our estimate, or also called quotation, with the customer. Now in QuickBooks Online, we can share the estimate or quotation with the customer by clicking here. But one important thing to keep in mind is that this is not something from where the sales will be recorded or the accounting will begin. This is just a professional way of sharing a formal estimate with the customer, and definitely this should make a very good impression on our customer on the way we present our business. So here, first of all, let us enter the customer name. Let us say the customer name is Steve and Adam. That's a firm, so we will just enter the new customer name, Steve and Adam. We should definitely enter the email address so that we can send them the email from QuickBooks. So let's enter it and click on save. Now this is something interesting. The estimate status. Right now the estimate status, you can of course change that if it has already been accepted by the customer on the phone, and you can send that to them. But let's begin with the pending, and when customer accepts that, it should be updated. Let's enter the estimate date. It is fine that we can enter today's date, and then expiration date. Now it is important. Of course, whatever estimate we give to our customers, there should be a limit to that. After some time, the prices change and we cannot fulfill our commitment. So expiration date is important. So I would say that my estimate is valid for the 15 days. Let us enter the product or service. I would repeat that no accounting will be done here. This is just for your own, how it will be presented to the customer on the document that we share with them, the estimate document. Description, we can enter for 2 hours of service, whatever that is, and then the rate is going to be 100 in this case. Everything has been completed. If you like to attach some document, you can do that, like terms and conditions, etc. If you like some message to be appearing on the estimate or the statement, you can do that here as well. And then click on save and send, and this document will be sent to the customer. But of course, if you like to preview this, let's do that. So take a look, our business address, their business address, and the complete details. So this is just like the invoice, but the main thing is here it is mentioned that this is an estimate. And then let's close it and then click on save and send. See the details, your subject line, your body, you can edit that, your original document that will be attached, and then click on send and close. And the estimate will be sent to the customer instantly. Now here in the all sales screen, you can see this estimate. You can make changes from here, and when customer accepts that, you can click here on the mark accepted, and the status here will be converted from pending to accepted. Let's do it right now. First of all, you will update the status that can be accepted, or even you can mark it as declined if that is the case. If it is being accepted here, in this case, you can add the name. You can say here Mr. Steve accepted that, and you can also mention the date on which it was accepted. For example, it is on 1st of May, and click on OK, and you will see that the status has now been changed. And now you can see you have this button of convert to invoice. It was even available before. If you click on this drop down, it was available before as well. So once you click on this is the interesting part. Click on that. You can see all the data has been pre-populated. All you got to do is to correct the date whenever you are invoicing your customer and the due date, and then just send this to your customer by clicking here. So without any extra effort, you can convert your estimate to invoice and send it to the customer. And finally, let me remind you again, the accounting will be done when you will be making this invoice and saving it in your system. Until then, no accounting is done. Even if you have an estimate that is in pending state or even accepted state, estimates do not result in any accounting in QuickBooks Online.